What is going on, guys? Welcome back to the channel. My name is Matt. In today's video, we're talking about Alberta and how hot of a market it has been, and we're just going to dive into it, explore Alberta a little bit, and then we're also going to talk about, if you are a mortgage holder, how to best prepare for a recession that is probably here or coming very soon. So we're going to talk about those two things today. So first off, with Alberta is a place right now where a lot of out of province home buyers are flocking to, right? So with housing prices soaring in places like Toronto and Vancouver, let's say over the last 10 years, many Canadians are looking for affordable options, okay? And Alberta is becoming the top choice. It's definitely the top choice for out of province buyers, even investors now. And you may wonder, like, why Alberta? So even though some home prices in Alberta have been on the rise, they're still much more affordable in places like Toronto and Vancouver. For example, in Edmonton, you can still find a really nice house for around $450,000, okay? Something that's almost impossible to find in bigger markets around the country. Calgary and Edmonton are two cities that have been defying the national trend of a market slowdown, right? They have been the two very bright pillars of the Canadian housing market over the last few years. While other markets saw buyers stepping back, these two cities are where people are just rushing in to buy and they can't get enough of it, right? And I think a lot of it has to do with the current political system there, the regulations there, less red tape. So it allows for more building to be done. It allows for more investment to be made. Also lower taxes. It's just a better environment for investment capital, right? And so it's attracting capital. And so people from Ontario and BC who used to dream about moving to warmer places are now eyeing Alberta as their new home. Whether it's first-time buyers who can't afford their local markets or investors who are looking to get a foot in the door, Alberta is definitely on their radar right now. And part of what's driving this interest is definitely the recent moves by the Bank of Canada. Okay, so after the two interest rates that we've had over the summer, more Canadians are feeling more optimistic about buying a home, and Alberta's affordability is making it a prime destination. Another factor to watch is the new rule offering, right? 38-year amortizations to first-year buyers of newly built homes. Now, this is a game changer, right? Allowing buyers to afford new homes in Alberta makes it even more affordable. Okay, so new homes in Alberta, I think, are going to do really well now because of this new offering that came into place. And I'm already hearing from clients that are curious about how this will affect their pre-approvals. So what does all this mean for the rest of the year, right? So if the Bank of Canada continues to cut rates, we may even see more interprovincial migration, more people going to Alberta from Ontario, from British Columbia. Alberta could become an even hotter spot for out-of-province buyers. Now, how long this lasts, we don't know, right? This could last for a decade or two, or could last for a couple years and then slow down. It's going to be really interesting to see how all this plays out. And so what about if you are currently a mortgage holder and you're trying to prepare for the recession that's here right now or possibly coming? So that's what I want to talk about and how to prepare for this. So with all the chatter about a possible economic downturn in Canada, it's definitely really important to think about how this might affect your finances, okay? Especially when it comes to your mortgage. Losing a job or a source of income can really shake things up, right? So let's dive into some practical steps that you can take to be prepared for this. So first off, one of the best things you can do is secure additional financing while you're still employed, while you're still making income. Perhaps apply to get some lines of credit, perhaps some home equity lines of credit. These can be real lifesavers if things get tough, right? Better to rely on stuff like that than a credit card, because credit card, you're just paying a lot of interest. And if you do have to use credit, you're probably better off using credit that's under 10% than that's something that's around 20%, okay? In the long run, you'll be thankful for that. And the thing is, these types of products are much harder to actually obtain when you really need them, which is the funny part. So it's actually much better to just get them. And when you're getting offered them, usually your companies that supply you with the financing products, they'll offer you more products, maybe loans, lines of credit. So it's actually really good to get them and have them while you don't need them, because when you do need them, they do come in handy, right? And it's just a really good buffer to have to give you some peace of mind. So it's like having an emergency fund, but with a little bit more flexibility. That being said, not to say that you shouldn't have an emergency fund. You should have one with cash, okay? But if you need to use credit in a dire situation, it's good to have these at hand. And also, I think it's a really good thing to actually have a good open conversation with your lender. So if you ever find yourself in a really nasty financial place, whether it's due to job loss, let's say you're getting reduced hours at work or something else, your lender might have options that can help. So they could offer you delayed payments, deferrals, or even temporary reduction in your payment amount, okay? Now, temporary, not forever. And the key here is actually reach out sooner than later. The earlier you talk to your lender, the more options you might have to navigate through difficult times. Now, let's talk about something that might be a little bit counterintuitive, right? Prepaying a portion of your mortgage. So if you have the ability to do this, it's a really smart move. So if you're prepaying your mortgage, you can lower your monthly payments, which might be a big help if your budget gets tighter in the future. So if you have a lump sum of money that you can put towards your boom right away, really helps out. It's especially useful if you're anticipating a possible reduction in income, or if you just want to reduce your financial burden. Even a small prepayment can make a difference in your monthly cash flow. And also, I think lastly, I just want to emphasize the ability of being proactive about this, right? So none of us wants to think about losing our income. It's never an easy thing to go through, but planning ahead can make a huge difference, right? So securing additional financing, talking to your lender, paying down your mortgage, these are the few things you can do to prepare for a possible recession, right? And that's the thing is, when recessions come, if we're in a recession right now, I'm gonna be really honest with you, like a lot of people are gonna be hit hard by job losses if it does occur, right? If we're in it right now and it's going to get worse over the next year and a half, people are going to lose their job and not be ready for it with the financial aspect, because what'll happen is people will lose their job. They won't have additional financing or anything to back them up. They won't be able to find another job because the economy will start to contract and be very not favorable for finding new jobs, okay? Especially if you got laid off, because if a lot of people get laid off, then a lot of those people will start looking for jobs, and then there's more competition for those open jobs, less open jobs because companies are contracting. And so you're finding yourself just not working and not having an income for a longer period of time while you're looking for a job and competing with so many other people. And it leads to stress. It can lead to other things. It can lead to a lot of problems, okay? Never an easy thing to go through, but it's important to think about it and prepare for it, because a lot of people don't prepare for things like this. And if we do enter really rough financial times in the next couple years, you're going to be really glad that you took out maybe a 10, 20K line of credit at your bank or with a lender, or you have a little HELOC set away for 50 grand or 100 grand that'll help you just make your payments and get through it, right? And that's something that you can then pay off and roll into your mortgage later, right? There's so many different little strategies you can do, but if it gets you through a rough period, it's worth doing, right? As long as you're prepared, because if you're not prepared, that's when it can get really tough. If you guys want to reach out to me, you have any questions, I'll leave all my information down below. And if you guys enjoyed this video, please hit the like button. Really helps me push these videos out to a new audience who might really benefit from the information. And until the next video, guys, take care.